Hey guys, this is a continuation of our previous tutorial on credit accounts. If you haven't checked that out, make sure you do so before we jump into this one. So in this tutorial, we're going to be covering the trade page, and specifically we're going to be covering spot trading and margin trading. For margin trading, we'll also cover shorts and longs. So how can you get long exposure to an asset? How can you get short exposure to an asset with margin? All right, let's jump right in. So in our previous tutorial, I was using DevNet, sort of like a testnet environment. In this tutorial, I'm using mainnet. So these are real funds. It's a shrimp small account that we'll be playing with. We have about $8 in value, about 30 Osmo. So yeah, we'll see what we can do with it. So the first thing we want to do is just execute a simple swap. And so we head to the trade page on app.marsprotocol.io, and we toggle this off if it's already on. So this will allow us to do any spot trade. And what we want to do is sell an asset and buy the asset we want, right? So just a simple swap. Since we only have Osmo in our account, I'm going to sell Osmo. And what I want to buy is I want to buy a stable coin. So let's go to USDC. And here you can select your amount. I'm going to select about 50% and then buy USDC. Something you'll notice very quickly is when I toggle this, my account balance changes on the right and also at the bottom. So you see USDC is going up and my balance of Osmo is going down. So yeah, let's make that transaction. Cool. Pending. There it goes. So now we've swapped and we have USDC and Osmo. If you look at our balances, you'll see this reflected also down here. Nice. So now let's jump into margin trading. So a quick summary is essentially that when you're margin trading, you're borrowing an asset and immediately selling it in order to get exposure in a certain direction, either longing or shorting. So let's explain this with a little bit more context by jumping into longing first. So when you long an asset, what you want to do, let's say for instance, we want to long osmosis, is you want to buy the asset. So we'll have Osmo on the buy side. And for selling an asset, typically when you're longing or shorting, you want to use a stable coin. So the reason for this is that whenever we're selling selling USDC and buying Osmo, what we're really doing is we're taking up a debt or a loan in USDC and then selling that off immediately in order to get more exposure to Osmo than we would have if we just spot traded. So the idea behind this then is that if we're right and Osmo increases in value, we still have this stable coin debt, which means that in terms of our strategy, it's profitable to pay off the debt and keep whatever returns are there. On the flip side, let's say you have this debt in USDC and you swapped it for Osmo, but now Osmo is going down. So you're longing Osmo, but it's actually going in the opposite direction. What happens there then is your debt becomes relatively more expensive to pay off given the Osmo position that you have and the fact that it's decreasing in value. So that's the basic premise. And so let's see this in action. So the first thing you want to do is toggle the margin button on. And so what you'll notice here is this bar. It has a kind of a line and it says margin. What that means is like if I am swapping anywhere before that bar, you'll notice that my USDC balance is going down and my Osmo balance is going up because I'm selling USDC and I'm swapping for Osmo. But as soon as I go above the margin line, something interesting starts happening. So what you see is my balance of USDC is completely zero. I have no more USDC to swap to Osmo. And instead what's happening is I'm actually taking on a USDC debt, right? We see it down here. And so the further I increase the debt, the more margin I have in being able to get access to Osmo, exposure to Osmo, right? So we see our Osmo exposure increasing, we see our debt in USDC. So let's take this position. And another thing you want to note while you're making these leverage actions is your health, right? So notice how If I don't take too much margin, I can, I have a healthier position. If I take way too much margin, I'm much more likely to be liquidated because I wouldn't be able to pay off my debt much easily given price action movements. So let's just do something kind of in the yellow. There it goes. And we'll buy Osmo. Spending. There it goes. All right, so let's see what we have now. So we don't have any more USDC because we completely used it all up. Instead, we have this USDC debt, and we have more exposure to Osmo than we would have been able to have. So if you go down to the borrow side, you'll actually see your debt here, and this is where you could repay it. So you borrowed USDC, and yeah, this is where you would borrow more if you wanted to get more leverage, or you can just repay your debt. All right, now we're going to do shorting. So for longing, we had Osmo on the buy side and USDC on the sell side. So we're still going to be using a stable coin, but we're just going to flip this. So we're going to be selling Osmo and we're going to buy USDC. And remember, you want to toggle on margin. So let's look at the account we're playing with. So at the moment, we have about 648 in Osmo and 333 in USDC. So we're going to be selling Osmo, buying USDC on margin. So similar to our previous example, when we're before the margin line, what we're simply doing is we're selling Osmo and buying USDC, a simple spot trade. And you can see that reflected on the right side menu. So for example, you see the numbers decreasing. You see our balance of Osmo is decreasing. It's now 369, but our balance of a USDC is increasing at 614. And as soon as you go beyond this margin line, something interesting starts happening. Our Osmo balance goes completely to zero. We don't have any more Osmo to swap to USDC anymore. But now we have this Osmo debt, right? So it's 624. And the value of our USDC continues to increase. And so if we get more margin on it, what that really just means is we're getting more osmosis as debt and more USDC exposure. So we're incurring an Osmo debt, swapping out of it, and getting more stablecoin exposure. So how exactly is this shorting Osmo? So what's happening here is you have this Osmo debt, right? And so if the price of Osmo is going down and you're shorting, that means that your Osmo debt is much cheaper to pay off. Since you have this Osmo debt and you swapped out to stable coins, Osmo is going down in value, and therefore you can repay your debt with the stable coins much cheaper and have some form of return. So that's the kind of basic premise behind shorting. However, let's say that Osmo is actually increasing in value. So what that means is if you have an Osmo debt and you swapped out of it to a stable coin, but Osmo is actually increasing in value, the size of your debt remains the same. It's 8074 in this example, but the value of the debt continues to increase, and therefore it's not profitable, right? You're losing out on this position, and you maybe want to repay your position sooner or whatever your strategy is, etc. But yeah, that's kind of the basic premise behind taking on the debt and seeing if the underlying asset for the debt goes in your direction or not, and that determines kind of your exposure to it. So let's take on this position. We'll buy USDC on margin. And we'll approve the transaction. Cool. So now what we see is we have more USDC, but we also have an osmosis debt, right? And we can see that in our borrow tab. So if we head to our borrow tab, we'll see we have, we've borrowed osmosis, $21 worth of it, and that is our debt. If we want to close our position, then all we would simply do is repay our debt and our position would be closed. So let's see, we can go to the trade page And we can, since I don't have enough Osmo, I don't have any Osmo to repay my position, I'm just going to swap to Osmo using USDC. Just a simple spot trade. Trade most of it. I'll buy Osmo. Approve the transaction. Cool. And now I go back to the borrow tab. I go to repay, and I repay my debt. Approve the transaction. And take a note of this health bar. You see it went from yellow to full purple to 100%. The reason for that is because as soon as I pay back my borrow position, I have no more leverage, right? I just repaid back the debt I was using to get leveraged exposure in the first place. So now we're just back to our assets. We have USDC, we have Osmo, no more debt, and the position is closed. So if you want to learn more about spot trading or margin trading in Marsv2, head over to the docs. In Learn, you can head to Marsv2 and you can click on the Trade tab. You can learn about spot trading, you can learn about margin trading. And if you want step-by-step tutorials, you can also go to the Tutorials tab down here, click on Trading, let's say margin trading long, and it'll walk you through the steps you need to do. Sweet. Stay tuned for our next tutorial.